I wanted to thank you so much for attending this webinar on the new tax law. The law is getting a ton of buzz in the industry, and there's been a ton of speculation out there about what it will mean for nonprofits. And Claire is going to cut through a lot of that speculation and give you some real-life information about the law and what it actually does, and we'll give you some concrete strategies that you can use to cope with any changes that you'll see in your organization. My name is Abby Jarvis, and I'm part of the team over at QGive. We work with nonprofits all over the United States, so this is a topic that is very interesting to us and to all of our clients. We also like to focus on online fundraising and how to do that well, but we also want to make sure that the nonprofits that we talk to every day are equipped to deal with all aspects of their job. And that's why we're so excited that Claire is here to talk to us. If you have any questions, QGive clients, about this topic, feel free to email me. If I can't get you an answer, I will find you someone who can. If you don't work with QGive, this also applies to you. You'll get as much out of it as everyone else. And I think it's going to be really useful for everyone who's on here. Just a couple of housekeeping items. We are recording this webinar, and I'll send you a copy of the webinar after it is complete. Depending on a few different variables, you might get that tomorrow, or you might get it on Monday. But I'm really shooting to get it to you tomorrow. I'll also include any information or links that Claire shares, and I know that she is planning on having some cool things for you too. She is over at Charity Clarity on Twitter. Go check her out. She is a force to be reckoned with in the nonprofit industry, and she runs a really great little online fundraising school called the Clarification School. It is a really, really valuable resource to anyone who is looking to be a better fundraiser. So go check her out. It's a great website. We like it so much that QGive sponsors it. So full disclosure there. We think Claire is super neat, and we think she has a lot of wisdom to offer to everyone. If you are interested in following along on Twitter, we do have those two hashtags that are listed there. You can keep an eye out on those, and I will be live tweeting as Claire is talking to you. So with that being said, I'll turn things over to Claire. She has been working in the nonprofit industry for more than 30 years, and she's done everything from frontline fundraising to consulting with nonprofits on how they can be better fundraisers. And she is also sharing that information with you today. So Claire, I'll turn it over to you.
Thank you, Abby. Can you see my screen now?
Yes, I can.
Okay, great. So thanks so much for having me, and thank you to all of you for being here. And I really want to get right to the elephant in the room. And I would like to launch a poll to find out how many of you are really worried about this elephant. Like, do you think we're just not going to get as much candy out of the piñata this year? So tell me how worried you are about the changes in the tax law. Are you very worried that you're going to receive less or smaller gifts? Are you a little bit worried that that's going to happen? Are you not really that worried? Or are you excited at the new opportunities that may be on the horizon?
I'm looking at our votes, and it looks like we've got 63%, so well over half. Now it's up at 65% of people who are a little bit worried that they'll receive less. 11% are very worried. 11% are also very excited. So we have some interesting numbers there. And then about 18% of people really aren't very worried. But the vast majority of people who are looking at the poll do have a little bit of anxiety around this law and what it will mean for them.
Okay, well, thanks for that feedback, everyone. And I really want to try to reduce your worry and maybe get you even excited to raise more money this year than last year. So let's first, why should you pay attention to me on this? I've been doing this a while in a variety of settings in the trenches. And after 30 years in the trenches, I've seen a lot of changes in the tax laws, in interest rates, recessions, all sorts of stuff to worry about. And guess what? I have found that the worries are often overblown, and they cause us to make excuses rather than double down on fundraising fundamentals. So today I really want to teach you what I've learned, and also want to remind you that nothing I say today is intended nor should be construed as professional tax advice. You should always consult with your own legal and financial advisors, and you should always encourage your donors to do that as well. Okay, so let's take a look at what's different in 2018 and why good, solid, basic fundraising may matter more than ever. So the bad news everyone's worrying about is that the sky is falling. Well, guess what? Money never fell from the sky. So these are the things people are worried about. Tax Policy Center has come out and said that, gee, of those who made between $75,000 and $200,000, half of them itemized before. And the Lilly School says 30 million are going to be less likely to itemize now. And Kiplinger says less than 10% are expected to itemize in 2018, down from 30% now. So here's what I'm going to tell you. If you counted on language on tax deductibility to inspire people to give to you, you need to revise that strategy. But actually, that's not such bad news, because tax savings is not the primary reason people give. So just because they don't itemize doesn't mean you're going to lose them. Plus, there's an overlooked truth in the tax law about how folks are going to fare in the short term. The bill is actually going to reduce taxes for 5 out of 7 segments of the economic spectrum. So 80% of US households in 2018 will have increased after-tax income. Not a lot, an average of 2.2%. And only 5% are going to face an increase. So just stick a pin in that for now. Most people are going to have more after-tax dollars. And let's look at some of the other key impacts of the law. So the standard deduction is increasing. It's almost doubling from about 6,000 to 12,000 for individuals and 24,000 for joint filers. So this leads to the perception that people have, gee, this is a raw deal because giving is not going to have the same bang for the buck, because we're not going to be able to deduct our giving, because now we're going to take the standard deduction and we won't be able to deduct our charitable contributions. The other thing is that personal exemptions are being eliminated. So again, people perceive this as a raw deal. The middle class is feeling like, oh, well, we're losing something that we had before. State and local taxes, SALT, will be limited to $10,000, and that includes income and property taxes. So in high tax states, like where I live in California, New Jersey, New York, people feel like that's a raw deal, like that's deductions we're losing. Corporate income tax rate is reduced. People feel like that's not fair. The individuals are having to pay. And then again, 5 of 7 tax brackets reduce. And even that is perceived as a raw deal because people think, oh, well, I don't know the details, but my bracket's probably still taxed high. Okay, so it's really important to keep in mind that the tax deduction is not the only benefit of giving, and fundraising strategies that are tied to the vagaries of how people are taxed or how people perceive they are taxed is not the best idea for long-term fundraising. And the reality is that even these tax cuts are going to decrease over time and end altogether in 2025. So now is the time to begin to learn what really motivates donors to give, and it's generally not deductions. However, money does come into play in another way. The first motivator for giving is how people are feeling about how they're doing. Here's a great quote: "Giving reflects the direction of the economy and how people are feeling about their economic future more than it reflects the perceived tax benefits from making a gift. Recent studies tell us folks are more optimistic about their financial future than they have been in almost a decade." So more flush donors, or feeling more flush donors, are likely to spend their wealth. So you want to talk to the donors who are feeling the most flush, regardless of tax deductions. So economic outlook plays a significant role. And right now we have low unemployment, we have a high stock market. Both of those things should indicate a positive outlook for 2018. And also, most charities, the bulk of their money comes from boomers. Many donors are older, many live on fixed income, so higher interest rates are having a positive effect on many donors' portfolios. So we're going to also look today on how some folks are going to be getting unexpected windfalls, how people who do itemize now are going to be able to deduct even more than they were in the past. So giving is going to actually cost them less. And then we're going to look at some of the benefits that were left untouched by the new tax law and are still in place whether or not your donor itemizes. But first, I want to give you a little bit of historic perspective and take a look at what's really happened with giving over time, despite changes in tax law. So you can see from this graph, there's been an upward trend for 30 years with an average increase of 1.9% every year. And the exception, when we saw a dip down, was the decline in 2008, 2009 during the Great Recession. The only other obvious decline was during the 2000 dot-com bubble. These weren't even tax changes. There doesn't appear to be a direct correlation between tax law changes and giving. So now is really the time to focus on what's in your control and not on what's not in your control. You don't control tax policy, you don't control the economy. What you do control is philanthropy. And I mean that in the sense, the truest sense of the word. Philanthropy translates from the Greek and means love of humankind. If that's what it means for donors in the truest sense, love, not money. So that's where we get into why folks give. Deductions are icing on the cake. Icing is nice, but most people still want the cake, icing or not. They value the cake. They value your mission and your vision, and you distract them from what they most value when you focus on the gussying up the tax deductions. It's not the smartest way to fundraise. It never has been. It won't get you the best, the most passionate gifts. The most significant factor in giving is connection and commitment to your mission. So I'd like you to use the impetus of the new tax law to get back to fundamentals and tapping into why folks give. And when you're sort of organization centric and you're all running around saying, whoa, woe is us, donors aren't going to want to give to us as much, we better hunker down. It's kind of an excuse, like you're preparing yourself to fail. And instead, you want to share what you love. The donors care about the benefit to them. They care about doing something that aligns with their values. So you really talk about how yummy your cake is and how it's filled with heart and how you, the donor, are going to just love helping us with this, being involved with this, joining our family, joining our community. And this is going to transport people. It's not a single transaction. It's a transformational kind of thing. So you never should have led at the end of the year with, do this so you can get a tax deduction. Sure, you still want to do end of year fundraising because that's when people are habituated to give, but you want to ask in a way that triggers their emotions rather than their logic, because there's a lot of research done that shows that the heart trumps the head every time. You get larger gifts by inspiring people to jump into your narrative and become the hero. And that brings me back to the good news. The sky is not falling. The universe is continuing to swirl around. And what we know from lots of studies is that the biggest philanthropic motivators are a feeling of a moral or a religious obligation to give. It's kind of a version of the golden rule, doing the right thing. And these 9 moral adjectives I have up here are from research by Jennifer Shang in the UK. And these are the adjectives that tend to compel giving. People want to feel that they are all of these things. The other thing that compels giving is the search for meaning. It's an existential quest that we have. If you're familiar with Maslow's hierarchy, once our security needs are met, we tend to search for love and belonging and self-actualization. And philanthropy helps people fulfill their highest purpose. So you want to kind of help people align with that. And then finally, generosity just feels good. And you may be familiar with the MRI studies that have been done that show that when people give, and in fact, when they even contemplate giving, they get a shot of dopamine, the pleasure center of their brain, the same place that's responsible for feeling good about eating chocolate or having sex. It lights up, and they get this warm glow. So let me quote from one of my favorite musical heroines, Dolly Levy, in Hello, Dolly. And she said, money is like manure. It's not worth a thing unless you spread it around. And what you really want to do is show your donors the best way to spread their money around so good things spring forth. And good things to them are not just, oh, I gave you a fat check. That's a transaction. It just doesn't stick. It doesn't give a warm glow. Partly what floats their boat is the impact that that check has on the mission. But even more than that, and this is where a lot of nonprofits fall down, it's how that act of philanthropy will make the donor feel. And this is not a webinar about how to do stewardship or how to enact donor love, but I write about it a lot on clarification. And really, you have to kind of keep your donor feeling like, wow, they've just done this really wonderful thing. And you facilitate how your donors feel through how you do fundraising. And here we are back to, this is the Maslow hierarchy of needs. And you can see how people are kind of trying to, through their life, depending on where they are, move up this pyramid to get to the point where they feel like they are the highest version of themselves. Viktor Frankl wrote in The Search for Meaning, love is the ultimate and highest goal to which man can aspire. And love is what philanthropy means. So it's a really nice kind of match, I think, because at the self-actualization pinnacle, donors just feel darn good. They carry around this warm glow that represents this realization of their potential, this inner peace. And it's a very powerful feeling. Humans naturally seek it out. It's one of the reasons even the very poor give outsized proportions of their income to charity. So if you want to create lifelong passionate donors, you have an obligation to do something proactive to fulfill your donors' highest level needs. That's a fundraising fundamental. You're always asking, what's in this for the donor? That's donor centered, rather than thinking, well, we need this and we're doing good work, so they should support us. Okay, now let's get back to the topic at hand, because still, a little icing never hurts. So let's look at where to focus, where you're doubling down on fundamentals and sprinkling some sugar wherever you can to give donors that little extra push to give to you to buy your particular cake in the newly revised tax landscape. So here we're going to cover 8 tips for dealing with the new tax law. And we're going to go over each one of these individually. So I'm not going to take the time to read this to you now. You're going to get the slides afterwards, so you don't need to write these all down. So the first is ramping up major gift fundraising. So data from the Fundraising Effectiveness Project shows a continuing trend over the past decade, which is that you will have fewer typically wealthier donors giving larger gifts. Fewer donors, larger gifts. And with the reduced incentive, or the perception that there's a reduced incentive to make gifts to charity for small and mid-level donors, it makes total sense to focus your efforts on wealthier donors. And the very rich are going to have more after-tax dollars to spend. So you can meet with them one-to-one and say, hey, how are you intending to spend your tax law windfall or your rising interest rate windfall? There are people that are doing very well in this economy. 88% of money has always come from 12% of donors. It's why I offer a major gifts course, because I think it's so important for all organizations to have a major gifts program. But now it may come from an even smaller slice. So more than ever, this is really important. And some of the people in this small slice may feel some guilt over being the winners here. So again, instead of saying get a deduction, how about talking about this is the time of year when we share our blessings. Have you been blessed this year? If you have, this is what you can do. Also, some of these guilty people are also feeling like the onus is falling more squarely on them, on philanthropists, because the government is clearly showing that they're trying to step back. So again, whatever you do, don't buy into all the negative publicity and use it as an excuse for failure. Again, focus on what's within your control, which is solid fundraising. Major gift fundraising has always given the biggest bang for the buck. And here is a chart from James Greenfield, who's the guru of figuring out the cost benefit of fundraising. And you can see capital campaign and major gift has the biggest bang for the buck. The cost to raise $1 is the least expensive here. And it's also pretty inexpensive for planned giving. And what most charities do is a lot of direct mail donor acquisition, which is very expensive, and special event fundraising, which is also very expensive. So if you haven't been making a lot of face-to-face visits, now is the year to start. Number 2, you want to also pay extra attention to mid-level donors. Now, on the left, you'll see the big winners in the new tax law. And of course, you're going to want to talk to some of these winners if you have them in your database, or if you have board members who know some of these people. These are the folks that have the biggest windfalls. And then on the right, we have the biggest perceived losers. These are the people who are going to be in your mid-level. And this is where, if you do nothing differently, you could see donations diminish, because these people are the ones that just are not feeling the love. So you can give them that love that they're missing. Give them lots of love. So that would be the 2 things I would recommend that you do differently: is have a donor love program, have a donor retention program, have a written plan for donor stewardship. And again, this webinar is not covering that. That's a huge topic unto itself. Again, I write a lot about it on Clarification. You can find a lot of articles there. But you want to do that, and you also want to make it really easy, convenient, and even fun for people to give to you and give more to you. So I want to give you 2 suggestions, 2 winning mid-level donor strategies that I don't think enough charities use. One of them is monthly giving. If you have a monthly giving, this would be a good time to ramp it up. If you don't have one, to add one. And then on the right is do-it-yourself, peer-to-peer fundraising. So monthly giving. Research shows that it increases donor retention from 45%, and this is Fundraising Effectiveness Project, AFP data. Overall, we're retaining only 45% of donors. First-time donor retention, 23%. So it's pretty abysmal. But if you can get people on a monthly giving schedule, retention is 90%. That is absolutely huge. And there are many companies that you can align with. QGive may be one of them, where they can help you facilitate a monthly giving program and make it pretty easy for you. And it's well worth it because of how many more donors you retain and how you will tend to increase the average gift from those people. Peer-to-peer fundraising is similar, and one of my favorite is a birthday campaign. Charity Water does this. This is the organization WOTC. It's right on their webpage. And if you're having a birthday or an anniversary or a graduation or something like that, you just send an email from your own fundraising page asking your friends and family to make a donation in your honor. And so it's a really great, easy way for donors to feel empowered and for you to get a lot more donors that you wouldn't have been able to reach otherwise. And it can change somebody, like if I'm a $100 donor, but I suddenly ask my friends to give for my birthday, I could become a $1,200 donor. So I become the equivalent to you of a major donor. Even if you don't add these, your real opening with mid-level donors, all donors really, is opening your lines of communication more effectively. Penelope Burke, who wrote Donor-Centered Fundraising, said over a decade ago, from her research, treat every donor like a major donor. And now more than ever, you have this opportunity to show donors some love. And she says donor communication is not an add-on. It's a core fundraising function that produces long-term income security. It's one of the reasons that I talk to organizations all the time about integrating your fundraising and marketing functions, because communication from the donor perspective is from one suitor, your organization as a whole, not from the marketing department and the volunteer department and the donor department. And donors told Penelope Burke more than once in multiple year surveys that if they got what they wanted in terms of communication, 93% would give again and 64% would give more. And all they really want are these three things: a prompt thank you, a personal thank you, and some communication before they're asked again that's powerfully demonstrative of the impact of their gift. So tax deductions were not, they almost didn't show up on the list. They were so far down on the bottom. So they're a reason, but only a good one if you give them no other reason. So it's really important to work a little harder to make a good impression. And so I would say, commit to making this year about donor love and donor experience and not about you. And there was a study done by N10 and Charity Dynamics that found that donors' charitable attention is likely to be distributed across multiple causes, but they are likely to give a greater portion of their annual giving to a single charity with which they feel the most connected. So that should be your goal. Strive to be your donor's favorite charity. And the more donor-centered you can become, the more likely this will happen. And there's another study done by AFP that showed the reasons that people leave charity. And you can see up here on the screen, and I've highlighted with the red arrows, the ones that really have to do with communication and service. And more than half of donors leave because they don't get good communication and service. So you don't want to delegate these functions if you're a fundraiser to marketing or reception or program staff or whatever, because they're essential in keeping them. So you always have to think in terms of every piece of content that you offer, what's in this for the donor, both in terms of what you offer them initially, the appeal letter, and especially in terms of how you follow up with them. And if you need to persuade your powers that be that you need to invest more in donor communication and donor love, I do have this slide here, which you can look at later, that has a bunch of different surveys, which all show why donors are leaving and what they want and what they would do in terms of increasing their philanthropy just if you communicated with them more effectively and in a more donor-centered way. Ultimately, that translates into demonstrating to them what their giving accomplishes. And I will often say to people, if you want gifts, you must give them. And so donor-centered content is a gift. And I always talk about offering content through a communications lens, not a fundraising lens. So communication is, here's a photo showing what you accomplished. Here's a story of how your gift helped. Here are some tips we give to the moms you helped. Thought we'd share them with you too. Then you give them 8 ways to childproof your home, which is a little gift of content, and it's useful. Not stuff that says, the need is still so great, thanks for your gift, we could use more help. And not stuff that's about you, like here's our new board member, or we just rebranded, or here's a check we received. So the communication lens channels philanthropy, love of humankind. When you view the world through a fundraising lens only, it's too much about monetary transactions, and that doesn't make your donor feel good. Storytelling creates a collective experience. People can sort of see how they fit into the picture, how they could give the story a happy ending. Language that gives donors ownership, like you did this, you are awesome, you're our hero. And then sometimes giving people unexpected gifts, tokens of appreciation, certificates that, like, you just served your 1000th meal. I have a creative ways to thank your donors ebook that has 62 different creative ways that you can show love this way. Okay, let's move to the next tip for dealing with the changes, and that is to take advantage of new corporate giving opportunities. A new kind of philanthropy is moving front and center in the corporate world, proactive giving that's closely aligned with the mission and assets of companies and quite strategic. If you're a nonprofit with a strategy for making change that syncs up with the assets and goals of major companies, you might find a lot more funding partners in the corporate world than might once have been the case. So, businesses are getting a tax cut, a big one, from 35% to a flat 21%. Also, there's this pass-through deduction, which means that generally 20% of qualified business income is not going to be taxed. So talk to businesses that you know and ask them how they expect to spend these extra dollars. We know that right after the law was passed, some large companies announced wage increases and bonuses. Others have said that was just a publicity stunt. In many cases, it may have been, but think about the fact that cause-related giving is another route to great publicity. So what better time to begin a discussion with businesses about how giving to you could generate goodwill for them? And they've got the money now. The next is to reach out to foundations, many of which are benefiting from the robust stock market. Foundation endowments have fared well over the past year, with the Dow Jones Industrial Average up more than 30%. So even though giving by foundations is only 15% of all giving, and that's why I spent so much time on giving by individuals, there is an opening here where assets that foundations have are up 3.5%. And some of these foundations actually never returned to pre-recession giving levels. They cut back their giving a lot, and they cut back their list of grantees enough. And now is really the time for them to readjust. They're going to have a lot more grant making power in the coming year. So you should talk to them. Legacy giving. So legacy giving is something that I believe every organization that's been around more than 10 years should be very proactive about. And you should be talking to your donors about making a bequest or some other type of legacy gift to you. But don't focus on the tax benefits. Don't focus on how a bequest can help them save on their taxes. Focus by asking them how they want their values to live on. What do they hope to pass to future generations? There is some bad news here with the new tax law, because the new law more than doubles the size of the estate tax exemption to over 22 million for a couple. And so there's not a lot of people who are going to have to worry about saving on their estate taxes. And before this happened, I used to tell donors that they had, if they were subject to the estate tax, they had three choices of where to leave their money. One was their family, one was government, and one was charity. The kicker was that they had to pick at least two. So many preferred the option of family and charity to family and government. So the new tax law effectively eliminates this inevitable choice for many people. And that is going to cause a substantial decline in very large gifts, the kind that can be really transformative for charities like colleges and hospitals and large arts organizations. And the best evidence that we have for feeling like this is going to have an impact is 2010, when those of you who were practicing at that time might remember the estate tax was not in force for 1 year. And bequests that year dropped 37% from the previous year. But then the next year, the estate tax was restored and bequests rose by 92%. Don't forget, however, that if you have a donor who has no heirs, they still have a bilateral choice: government, charity. And they may prefer their assets to pass to charity rather than to government, because that way they can direct the money to be going to help the causes that they most care about, rather than however the government chooses to spend that money. The next thing that I think you should think about in light of the new tax law is becoming a better advocate. Here's something from the Center for Philanthropy at Indiana University. Advocacy is an important function of most nonprofit organizations. It describes a wide range of expressions, actions, and activities that seek to influence outcomes directly affecting the lives of the people served by the organization. So there's been a lot out there in the news. There's been people who are storming the steps of the Capitol. People are enraged. Folks who rely on you for services may need you more than ever. Tax deductions are the least of many people's worries. So don't be afraid to tell your supporters how new laws, not just the tax law, could affect your constituents. And because of the recent tax laws, a majority in Congress is pushing for increased reductions in community development block grants, deep cuts to social safety net programs, all of this to make up for the deficits. And it's certainly not the first time that nonprofits have faced slashes in government funds, and it's certainly not going to be the last. But it is an opportunity for you to talk with your constituents about the issues that are most impacted for your charity. You know your issues, whether they be immigrant rights or gun safety or right to choose or affordable care or social security benefits or safety net services or net neutrality, whatever it is. Rally your troops to make your opinions known and show that you are there for people. You are fighting the good fight. Invite your representatives in to see your work in action. Help them to look like the good guys to their constituents. And the other thing we're seeing already is a rise of 501c4 organizations, because 501c4s can engage in unlimited lobbying in furtherance of their social welfare purposes, and they can use their resources to support or to oppose political candidates. So they have greater flexibility and potential power to affect social change than 501c3s. And high profile 501c4s, and some of you may be 501c4s who are on this today, include the ACLU, the AARP, the Sierra Club, NRA, National Organization for Women. And for individuals who want to make the most effective use of their money to fight for social change, donating to a 501c4 organization is a good option for them. Now, they don't get a tax deduction for that, but we know there's been a ton of rage giving, quote unquote, rage giving, and these organizations are getting a huge outpouring of support. If you're a 501c3, you can still take advantage of this. And even though 501c3s are prohibited to engage in substantial lobbying or political campaign intervention, there are still plenty of legitimate ways that you can advocate on behalf of your clients. And I just made a new slide this morning so that you can look up all of these 4 resources here. And I just read this morning about this Advocacy and Lobbying Rules for Public Charity Grantees of Private Foundations. And it's a free on-demand 20-minute course that is up on the Learn Foundation Law website. And it's for US charities that are seeking foundation funding to support their advocacy work. And I just saw it on the GuideStar blog this morning. And then there are these other resources. 2 of them are on the Nonprofit Law blog, and 1 is on the Alliance for Justice website, with guidelines for how you can legitimately engage in lobbying to benefit the folks that you serve. And that's an important way, I think, to continue your mission and to show people that you're a good guy, and that's going to make them want to donate to you. And then I want to talk about some of the benefits that have been left untouched. So Catherine Meary is one of the gurus of planned giving, and she wrote, "There has never been a better time to solicit major and planned gifts. The awareness of planned gifts among donors is growing, and many have more assets than they expected at this point in their lifetime." So one of the things that has happened with the new tax law is that those who are donating, itemizing their deductions, people who are single taxpayers who are giving more than $12,000 a year, or married couples giving more than $24,000 a year, many major donors are going to actually be able to deduct more, up to 60% of their adjusted gross income, not 50%. So their gifts are going to cost them less, so potentially they could give you more. Also, not every tax giving strategy has to do with itemizing. For people who have appreciated assets, you want to remind them that they can save and avoid capital gains taxes. So here you can see a study by Dr. Russell James called "Cash is Not King in Fundraising: Results from 1 Million Nonprofit Tax Returns." And what he found by studying a bunch of nonprofits between 2010 and 2015 is that nonprofits that consistently received gifts of stocks and bonds grew their contributions 6 times faster than those receiving only cash. So that is really huge. And if you are not out there proactively suggesting to people that they make gifts of appreciated assets to you, you really should. Because here's what happens. If I give a $10,000 cash donation to charity, I get an income tax deduction for that $10,000. And how much I save depends on what tax bracket I'm in. If I give appreciated stock worth $10,000 to charity, maybe I bought that stock for $1,000. If I sold that stock, I would have to pay capital gains taxes on the $9,000 in appreciation. But now I not only get an income tax deduction for the $10,000 fair market value of that cash, of that stock, I get a capital gains tax deduction. I don't have to pay capital gains tax on any of that appreciation. Now here's where it gets really cool. What if you have a donor who says, well, I love the stock I have. I don't really want to give that stock away. Then you suggest to them that they give that stock to you and they use the cash that they would have given you to repurchase that stock, which will now have a 100% fair market value basis. Rather than having a $1,000 basis, it will have a current fair market value basis of $10,000. So if they do want to go and sell that stock, they don't have to pay taxes on any appreciation at all. So that's a big win. And if you can get donors thinking about giving you appreciated assets, you've now got them thinking about giving from their big bucket, their assets, not just their disposable income. And people tend to give more money when you can get them thinking that way. The other thing that you can tap into in this realm is the power of qualified IRA distributions. So 8,000 boomers are turning 70 every day. And at 70 and a half, people are required to take a minimum distribution, RMD, required minimum distribution from their IRA. And if they don't take it, they can owe the IRS as much as 50% of what they were required to take. And if they do take it, they have to pay taxes on the income, and that can flip them into a higher tax bracket. And then all of their income is taxed at that higher bracket. So it's kind of a catch-22 for a lot of people. So what people can do now is they can donate up to $100,000 from their IRA by giving it directly to your charity. And that can be better than a deduction because the income is excluded from their taxable income. So it keeps many donors in lower tax brackets. And the gift to your charity counts towards their required minimum distribution. And this tax benefit is the same whether or not they itemize. And then there's one other nifty thing in this realm, which is tapping into the power of donor advised funds. So donor advised funds are much huger than most people realize. In 2015, Fidelity Charitable Gift Fund overtook United Way to become the largest recipient of charity in the US. And donor advised funds have long been a very convenient vehicle for donors who have windfalls of income in particular years. They don't want to pay a whole bunch of taxes on the gain, and so they put that into a donor advised fund where they can avoid paying taxes on the gain, and then they can make recommendations for distributions from that donor advised funds through multiple years to multiple charities. So last year, there was a lot of advice coming out suggesting to people that while they could still itemize their deductions in 2017, they make a much bigger gift than usual to a donor advised fund, essentially bunching up their contributions for future years. And then they can recommend out this year, next year, et cetera. So you want to talk to some of your major donors to see if they did this, because if they bunched, they've got money sitting in a donor advised fund waiting to be distributed. And this is kind of, again, like a big bucket. It's not their income. They're not really thinking about it. They did that already. They already got the tax deduction. But ask them if they have one, because that might be a way for them to give to you this year. For other people, you might want to suggest to them that they consider bunching. So maybe they give more than 12,000 or 24,000, depending on if they're married or single, this year. So then they itemize their deductions this year. They've got a bank now that they're going to distribute over the next couple of years. So they take the deduction this year, and then next year they go back to the standard deduction. I hope that made sense. And finally, this is kind of what I've been getting at through this whole presentation, is you really want to understand and tap into why donors give. We talked about the fact that they're motivated by a moral or religious obligation, by the quest for meaning, and about this just desire to feel good, to get this warm glow. So you really want to begin by standing in your donor's shoes and thinking, what do they want to accomplish? You have a mission, they have a dream. Find where those two align, and then be the bridge that connects them. Nobody is sitting there thinking, gee, I'd love to give $10,000 away, and I really don't care where it goes to. People think about what they think is going awry. What are the wrongs that need to be righted, and what can they do to right those perceived wrongs? So you want to talk to them about impact before you talk to them about money. You want to tell them a story that grips them, and then show them the happy ending and offer them the opportunity to create that happy ending. You really want to fully engage their total being, not just the teensy part that wants to save on taxes. And the more personally you can connect with the totality of your donor's being, the more likely you'll get an abundant gift that represents the fullness of your donor's passions and dreams. And think about the fact that folks give to political campaigns all the time. And in fact, there's research showing that there's a huge correlation between people who make gifts to political campaigns and people who make philanthropic gifts. These folks don't get a tax deduction. But giving doesn't come from that. It comes from deeply held values and beliefs. And if you're still worried about the impact of the tax law, take a look at this public opinion survey that the M&R company did after the law was passed, where they asked people how they anticipated the changes to the tax law would affect the amount they were going to give this year. And as you can see, 91% of all respondents said that their giving would increase or stay about the same. So 91% of your donors are probably there. And then they asked, well, okay, do you itemize? And those people who itemized before still were going to give, 90% say. And those who itemized and gave more than $100,000, the major donors, that group is 97% safe. And if you look at the one on the bottom line, basically what we can derive from that is that most donors are saying the tax change did not affect their giving last year. And for those that said it did affect their giving, more said that they increased their giving than decreased it. And that was true for high-income donors as well as donors who said that they itemized their taxes. And for donors who said they increased their giving in 2017 because of the tax law, virtually none of them anticipated decreasing this year. Doesn't mean that they won't, doesn't mean they'll do what they said they do, but it's another good reason to take your energy away from worrying and transfer your energy to something that's solid fundraising and solid relationship building. Helping your donor find meaning should be a central part of your nonprofit mission statement. Be donor-centered. Sure, help folks by alerting them to benefits of which they may be able to take advantage. That's a great thing to do. But do a much better job with fundamental fundraising, with making people feel good, with lighting up their pleasure centers. Because the equivalent of how you feel when you eat chocolate or have sex, that's a much better feel good than a tax deduction any day. So we have a little bit of time for questions. Abby, do we have any questions?
We do have a couple. One is from Kelly Phipps. She noted when you were talking about the motivations of donors and what motivates them to give, and tax deductibility really not being part of that. She said, how does that relate to the Chronicle of Philanthropy articles just released that say that donations are down so far this year? Is
Well,
that a cause for worry?
yeah, I don't actually think so, because they were down, I believe, the first quarter of last year as well. And,
Okay.
it tends to ramp up by the end of the year. So I don't know. I just don't like to pay a lot of attention to that kind of stuff, because that's not in my control. I want to pay
Yeah.
attention to what's in my control, and what might be happening across the United States. That doesn't necessarily mean it's my particular charity. I kind of adhere to the philosophy that my mother taught me. She used to tell me about getting a job or getting into school or something. She'd say, Claire, someone has to get it. It might as well be you. People are still
Oh,
donating. So if you do the right things, it might as well be you that becomes their favorite charity.
that's a really good point. And I wanted you to know that I've got a couple people who were so excited that you mentioned making 2018 the year of donor love instead of donor experience. So that kind of ties in and goes over really well there. And I did have one question that's pretty specific, so I'm just going to read it verbatim. With respect to the increase in the percentage of the AGI, does that apply to all charitable gifts, or does that only apply to cash gifts?
You know, I think it applies to all, but I actually don't know. So again, I go back to, like, this is not tax advice. Pretty easy to look up though. Um,
True, true.
yeah.
Okay. Yeah. That makes sense. I don't know. Do you have any resources that you would direct people to if they have more technical tax questions?
I think publication 1771 of the IRS, it's about
Okay.
charitable contributions, substantiation, and disclosure requirements. And then
Okay.
all of the websites that I put on my on that screen, the Tax Policy Center.
Hmm. Okay. Perfect. And everyone, you'll get that slide in your recordings. So if you didn't write it down, it's not the end of the world. You'll get it soon. And then I had kind of a question of my own. Um, to what extent do you think nonprofits should communicate with their donors about the way they're affected by the new laws? Should they do it at all? Should that kind of just be internal? Should they be willing to talk about it, or is there a place that it's appropriate to bring it up?
I would say in general, it really depends. You might bring it up with a savvy major gift donor that you're talking to one, or with a corporate donor, or with a foundation donor in some of the ways that I suggested, where you're just saying, how, what is the impact of the current economy and the tax law going to be for you? Are you expecting to have a windfall? Might our charity be a place for you to share some of what you've been blessed with? I think you can do that one-to-one, but only after you've done all the essential fundraising fundamentals and the person is already inclined to give to you. Because people are not going
Okay.
to I mean, planned giving, where people try to get tax deductions, or income for life by doing a charitable remainder trust or things like that. I worked a lot in that realm, and people did use it as a tax strategy, but those people were
Okay.
not philanthropic. And you really don't want those people, because in the long term, they don't stay donors, and the benefits to your charity are really not as good as you would like them to be. So again, stay away from focusing on money and instead have the strategy be focusing away from money. Like, I hate to see the only reason that people give in their appeal letter is get your tax deduction before year end. I mean,
Yeah.
that is not the main reason that I'm going to give. And I might give you $25 or something in the past because I was itemizing my deductions. But the main reason is be a hunger hero. And I was like, oh, I could be a hero. I could help Jimmy go to sleep with a full tummy tonight. That makes me want to give $100. I'm not even
Yeah.
thinking about taxes at that point. And when you really think about it, we give gifts to our friends and to our family all the time without promise of a deduction in return. And we give gifts to political campaigns without the promise of a deduction. And it's because we love these people or we believe in these causes. And folks who love and believe in what you do are going to do the same thing.
That's so reassuring, especially when talking about a topic that's as nuanced and kind of intimidating sounding as this. So thank you for sharing that insight. It's really valuable. That wraps up the questions that I do have. Anyone, if you are worried about missing some of these questions, or if you think of something else, you can absolutely feel free to email me or tweet at Claire or get a hold of us some other way. I know Claire has a ton of really fantastic resources available to you on her website. Please go check her out. You can also check out KeyGive's website. We don't talk about taxes so much as online fundraising, but maybe we can help you there too. So with that being said, keep an eye on your inboxes over the next couple of days, and I will send you an email with a link to this recording and some other resources. Claire, thank you so much for talking to us today. I know that you are a busy lady who does a lot of good in the world, and I really appreciate you sharing all this information with us.
Well, thank you. And, I really, really strongly believe in the joy of giving, and would love for you to think of your job as a fundraiser as being a joy facilitator, a philanthropy facilitator. One of the quotes that I like from Helen Keller is, "The only thing worse than being blind is having sight but no vision." You want to go forth feeling the privilege of being able to share your organization's vision and to transfer the joy of that vision and to ask others to join you in something that they love, just like you love it. That's philanthropy. That's your work, not to be a tax advisor. And your work unlocks something really good in your donor and brings them meaning and joy. So don't worry, be happy. Make donors happy too. That's a win-win.
Oh man, what an ending. Thank you so much. Everyone, I hope you can hold on to that and let that carry you through some hard times. Man, on that note, I hope you have a great afternoon. Keep an eye out, and we will be in touch with you over the next couple of days. So, all right, everyone, bye.